Hey, everybody. Hi, my name is Darison Chauskas, and I'm the global market analyst here at Markets.com. So, ladies and gentlemen, today we have a special day. Today we have the Federal Reserve interest rate decision. So, yes, not your usual Wednesday, but I think that we could have some interesting setups later on. So, hey, I will pick up on some of those. And actually, I have one in front of us already. So, look, USD CHF, I think that this one's going to be heavily affected. Well, obviously logically, because again, due to the fact that this pair includes a US dollar in it. So look, uh, all the funny part away. The fact is that we're currently seeing USD CHF near a key area of support, which is around the 0.8757 mark right here. And as you can see, we're currently seeing a rebound. That's fine. That's okay. Nothing in a way to kind of worry about. But overall, we have seen USD CHF in a way moving on a somewhat of a like a like a nice wave, like sinus cosinus wave pattern. And basically we can see that yes, at the moment we're on a somewhat of a downtrend. We're near key support zone, which in a way is kind of indicating that maybe there's a chance we could break that one. Look, of course, we have the Federal Reserve interest rate decision today, and the expectation is that we're not going to get any hikes nor cuts. I mean, okay, forget about even hiking. We're not even going to get a cut, because at the moment we know that the Federal Reserve is planning to cut by the end of this year. Twice at least. Well, this is according to the FedWatch tool. And previously last week, I talked about this one, and we were kind of at three cuts, by the end of this year. So we were this percentage was much higher, higher than this one. And yep, everything is slowly shifting. However, of course, the fact that will we see Jerome Powell during the press conference stating something that could potentially again bring the three cuts to the table? Well, again, let's wait and see, because at the moment, I mean, we know that the stock market is a little bit in the U.S. stock market is a little bit in shambles, because again, other indices, for example, the Chinese index, the German index, those are performing quite okay. It's the U.S. indices that are struggling right now. So, in order to kind of bring them back to life, I mean, maybe Jerome Powell could hint towards something like staying accommodative, and like maybe going for for more hikes if needed. Some statements like that. If that's the case, then yes, we could see indices, U.S. indices, maybe recovering a little bit. Let me just jump into one of those, like the S&P 500, for example. This one has been battered a little bit, and maybe that could jump back up a little bit. However, that means that we would need to sacrifice the US dollar a little bit. And looking at this picture right now, on DXY, on the daily chart here, you can see that also this key area of support near the 102.80 zone is, yes, it's a good one, it's a strong one right now. However, if, like I said, if the Fed comes out in favor more of further rate cuts, maybe, like I said, that could in a way play out negatively for the DXY. So that's what I'm saying. That's why the interest rate decision itself, the announcement, I really don't think that it's going to be like something spectacular. It's the press conference that everybody's going to be watching and looking out for. So I strongly recommend to do that, the same thing. And what I always strongly recommend is not to go into any trades before the press conference, before the decision happens, because again, it's a little bit of a gamble. You might have increased volatility. If you have very tight stop losses, those could get triggered. So rather wait for for everything to come out. Let's see the market reaction, and honestly, believe me, there could be some opportunities. But again, only if you're comfortable with that. You have to approach the market only if you're comfortable. If all your boxes are ticked, if none of them are ticked, not at least, or at least one box is not ticked, then honestly, really suggest not to kind of improvise too much. So, ladies and gentlemen, going back into the forex pair, and the one which I was the one in question right now here is, like I said, USD CHF. I like this one. It resembles DXY. So if you don't have a DXY to trade, then you can always look at this one instead, USD CHF. It kind of almost mirrors what DXY is doing, because again, there is a little bit of a different story here on USD JPY, USD CAD here, you can see. So I prefer, at this point, I prefer USD CHF as the pair, and let's see how this is going to play out. Like I said, at the moment, the expectation is the rate is going to remain the same. Most likely it's going to stay like that, because again, looking at this Fed Watch tool here, the 99% is going to stay the same. So hey, let's see what's going to happen today. And I just wanted to bring this one to your attention. And like I said, it's USD CHF is near a key area of support. Let's see if we can get a nice breakout there. For me to get comfortable with the upside on USD CHF, well, actually, I would need to see a break of this downside line. And actually, on my daily chart here, I would like to see a push above all my EMAs, the 50, the 100, and the 200-day EMA. And then I'll get a little bit more excited with the upside. So, ladies and gentlemen, that's it from me. I just wanted to throw this one very quickly out here. And look, let me know in the comments if you agree or not. I think that today could be quite an interesting day in terms of trading, but like I said, be careful, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Actually, see you later when in another analysis that I'm going to do. So thank you very much, and bye bye.